Morning all. How are you all doing? Morning Danny, morning Evil. Anybody else here? How are you all doing? Right. Market's just opened. Quick short on the FTSE this morning, straight into the shorts. DAX, no trade. Range is too small this morning. Morning Lucas. So today I'm going to go through the news as usual, have a quick look at what's coming up. Go through the strategies we've got running on live forward tests, the ones we've been looking at, the lazy trader strategy and the pullback strategy. See what's going on with the indices this morning. And then we're going to test this breakout strategy, which I've got doing a manual, a sort of visual back test at the moment, just running in the background. So we're going to go through what this strategy is, how it works, how it needs to be tested really for robustness testing. So we'll have a look at this in more detail this morning. This is what basically we're looking to do this morning. Morning, Jules. So good, named twice. Position trading account at the moment, got loads of profit on the table. Haven't got anything that's hit target yet. So still very flip-floppy, but not really going anywhere against today or this week. So nothing really banked there. Today we've got some news coming up. So we had the monetary policy minutes last night for Australia. The Aussie pairs, no ADRs. So if you look through, we've had a little bit of volatility during the Asian session, but nothing to write home about at all. So that doesn't seem to have affected anything. We've got the monetary policy hearings for the pound at 10. Might give us some forward guidance as to what Bailey's planning to do with interest rates in December, but we'll see. And then the main news today is CPI. So that's your main focus this afternoon, is the CPI for the Canadian dollar. All the CPI numbers have been coming out pretty much as forecast, so it might not do much this morning, but we'll see this afternoon. So that's the news. Second day of G20 meetings as well. Morning travel. Overnight news, we had a lot more talk out of Japan again last night. Very vocal at the moment, Japan. Still nothing. I scanned through this morning. Still no comment on FX movements. So nothing really. Just nothing really much out of Japan about the current cost of the yen. So we've had a pullback. Just happened, and we've had a kind of double bottom going this morning. So if it breaks that double bottom, there is a chance of this becoming the top and a pullback starting, but not convinced what's going on with it. So, but they haven't mentioned anything. So they will do a sneak attack, probably, possibly. Don't know. I really don't know what I've been doing this so many years. This is kind of new. This this size of intervention and this new monetary policy stance they have is new. That's partly what I'm going to talk about with this breakout strategy that we're going to look at this morning, because the breakout strategy that so I'm looking at basically this EA, just to give you some background. This EA I've had built for an absolute age. This breakout strategy, time-based breakout. So I built it basically when I built the opening range breakout EA, which is purely for indices to trade the open. I decided to build an EA alongside that, which was designed for forex. So I wanted to apply the same kind of thing to forex, which is just taking breakouts of volatility. I couldn't really get far with it, so I scrapped it. So I've had this kind of planned as a session for a while, and obviously I think it was Outro posted Rene Balk, who's a programmer who's done, I've never really come across him, I don't know much about him, but he did a video on a breakout EA that he's got, which he's apparently using, mainly trading yen pairs. So looks quite good on paper. I haven't robustness tested it. This is, to me, potentially curve fit, but the problem with this test is it looks great now, doesn't it? But the yen this year has completely changed. so any back testing you do on any Japanese yen pairs going back any time in the next 20 years is based on negative fixed interest rates, and high differentials causing carry trades, which has made the yen trend historically, always has done. The yen has now changed its interest rates. It's using an interest rate structure, and it's not using overseas bond purchases to prop up the yen. So therefore, it is potentially not going to be a carry trade instrument, and it's not going to be a trending instrument moving forward from now. This has only happened in the last 3 to 6 months. So any back testing we do here looks great. We can robustness test it, brilliant. But the thing that's going to make or break this strategy, specifically on trending pairs like the yen, is are they going to trend in the future? Because now they've got completely different monetary policy. So interesting to test, and it'll be an interesting forward test to try. But for me, if you look at the yen historically, I mean, it's a trender. It always has been. Yeah, it moves fast a lot of the time, and it's very always going in one direction or the other. It's had periods, but it's a trending instrument. This is going back to that's COVID. Yeah, it has these whacking great these bits here are the trends. This is a weekly chart, obviously, so you're looking at months flying past here, or years rather. This is 2011 to 2014, 2014 to 2016. So for those like 6 years, trended like a crazy thing. And then before that, from 2007 to 2010, for those 3 years, trended like a crazy thing. Since COVID, trended like a crazy thing. Its monetary policy stance there was the same as there, and there. But is that going to continue moving forward? Or are we just going to go into this sort of thing and hover around about this level? Just don't know. So it's a difficult one. And I'm not a fan of trend strategies anyway, because they're so hard to make profitable. However, I kind of like the daily breakout ones. So, but anyway, we will see how we go. So that's your news covered this morning. Opening range breakouts today. There wasn't one on the DAX. Long on the DAX, hedged on the FTSE. Shocking day yesterday. 3 hedges out of 4. So I was down £400 rather yesterday. Not that bad. Nasdaq worked well. So the Nasdaq, one of them worked well. I think it was the Nas that worked. Yeah. So Nas was good yesterday. Aggressive exit worked beautifully. That banked 400, just shy of 400, which paid for the hedge on the Dow. But the DAX was a hedge exit loss, and the FTSE was a hedge exit loss. So almost got out of that. Unfortunately didn't. So hit target, got the aggressive on, but didn't move far enough basically to get out the aggressive. That would have been nice because it would have paid for the other one. But anyway, so about £400 loss yesterday. So hedged this morning on the FTSE. That's the Nasdaq. Why I was looking at that thinking, where the hell is my trades? So FTSE this morning, ADR will do to the upside. We're hitting the monthly low here. Which month is that? That's a really old month, isn't it? So it's this low we've tapped into twice. So this is a double top on that low. So if we're going to continue short, it's likely to break down from here. We'll see. Right. So anyway, that's those covered. The strategies we've got running on forward test, I haven't even looked at them this morning. Where's my VPS? Let me just log in. So let's see those, can't we? So this is the trend pullback strategy. So the trend pullback strategy so far is down 2.8%. Hasn't managed to bank a profitable day yet, but it's not really making a massive loss either. It is hemorrhaging slightly, but with trend pullbacks, a trend pullback strategy works in trends, obviously. There isn't really much trending going on at the moment, so it's not surprising that it's going to have losses on it at the minute because it's not able to get to target on anything at the moment because nothing's really taken off, is it? So there's a lot of trades on. So if you look at the potential of all of these, every single one of these has the potential to bank approximately. That's a sell. Don't forget, this is a stop loss strategy. So obviously it's going to hemorrhage. It's going to have losing runs constantly because it uses a stop. So, but each of these has got the potential to bank up to $1,200 per trade. So when stuff goes into a trend, this will suddenly bank thousands. It's limiting the downside by making sure that any trades that don't play out are stopped out, and it's also trailing stops, remember, so it's getting stopped out a lot on trailing stops. The whole purpose of it is to control the downside. When something takes off for 3 days, bang, that's going to bank. I mean, the first trade that hits target is going to bank $1,300, so that is immediately eradicated. So I'm not particularly worried about it at the minute. It's a slow burner. It's a multi-day, multi-week strategy. So when we looked at this in the back tester, you know, the trades take many days to play out. It's only been running a week and a bit. So not really worried about it. And it's doing exactly as it was in the tester. So very easy for that to get that loss back. The lazy trader strategy, just not stopping making money. So TP after TP after TP, it's literally just TPing. It's constantly just TPing. It's brilliant. Love it. You're not having it. It's too good. At the moment, I'm waiting for it to go wrong. So this is the whole purpose of forward testing, is to identify where it's going to go wrong. At the moment, though, it's literally just banking somewhere between 10 to 30% a day, about 30%, 0.2 to 0.3 a day. So we know it's a slow burner. It's going to be generating general, profits every day, but not a lot. This is set on very low risk at the moment. Obviously, it's using 0.1. If I launch this live, I won't be using lot sizing on it. I will use a monetary risk, or actually I could use lot size. I could leave it exactly as it is and just adjust the lot sizing for risk, basically. But I'd rather put, if it is going to be something I'm going to use, I'll recode it so that it's got the option for monetary risk as well as fixed lot size, so that we can have a level playing field in every instrument. Yes, working very well. So the only problem trade it's had so far, and obviously this is early days, but so far the only problem trade it's had is pound US dollar. It stops out at 6 positions. We're in position 5. So if this pushes up today, this will exit, and it will just take that $10, get out. Wrong, didn't work, scrap it, put it down there as profit. And then if these 5 play out today, obviously we're in profit. So obviously the figures here, these numbers are literally based on every single instrument just using a 0.1 lot size. So it's not adjusted for risk at all. The purpose of the forward test is to test functionality and to test, does it hit the targets or not? I think that one's a pretty obvious answer, isn't it? We've had one trade there where it didn't hit target and it got itself back out at cost. We've got the Aussie Swiss there. Why is that Aussie Swiss on its own? $2,300. That'll be a spread. So you're going to get the odd anomaly. This is an anomaly basically. It's hit target. Let's have a look at that trade on the Aussie Swiss. The 14th, and that closed out on the 18th. So yesterday that closed out. We're not using time-based exits, are we? No. Yeah, so that is basically a spread issue. So the target actually would have been hit, it looks like. Yeah, look, there's the TP. So basically, at that time, it was spread. Target was there. Quick target pullback. Yeah, it hit it, but obviously the size of the spread has meant that that's actually got out at a break even. So, but you know, this is the trouble with trading at this time of day. You're going to get spreads, but you shouldn't really get taken out with a loss on it. But anyway, so yeah, it's that's doing really, really well at the moment. Obviously, need to give it a little bit more time. It's been trading for, when was the first trade taken on this? The 11th of November. So we're not far in, are we, to testing? But so far, exactly as back test results. And back test results, as we know, were pretty bloody good. So yeah, like it. So anyway, that one's working. And we'll obviously just keep monitoring those as we go. Hedged on the DAX. Good day. Bloody hell. Right. So downside target DAX. Yeah, I mean, there's nothing wrong with that, and there's nothing wrong with that as an upside. So this you can see it's very testing conditions at the moment. DAX and FTSE, very rotational. We've had rotation day after rotation day after rotation day. So we're waiting for some movement. It's not happening at the minute. So it's very difficult to trade during these conditions. And as we will see from the breakout strategy we're going to look at this morning, that is the problem with breakout strategies. So, right. So there we go. Anybody got any questions on anything so far? Not that we've really covered much. Morning, I'm late. What was the first new strategy discussed? What was the first new strategy discussed? The Phil's lazy trader strategy. Both of the EAs are in the group, yeah, in the private members group. So this is Phil's lazy trader strategy, which is basically a quick pullback strategy. So basically, if we have a down day, it goes long and it tries to just grab a small little scalp of whatever the target was I set. 0.3. So it tries to just grab a 0.3 ADR pullback. This one is a trend pullback strategy. So basically, if we it does the opposite, basically. So it's not a position trading strategy. So Phil's one is a position trading strategy. This is a stop loss strategy. So what this one does, basically, let me just find, I'm only running this on yen pairs. So there you go. There's an entry there as a buy. So basically, it will just, what it's doing is as we push down, it's getting in there with a pending order and then assuming we're going to continue. So basically what Phil's strategy does is if the market's pushed down, it assumes it's going to push back. We target that, we get out if it does. If it doesn't, we scale in and turn it into a position trade. This strategy, if the market pushes down, we place a pending order, wait for it to pull back, and then we enter short with a stop above the high and assume that we're going to have a trend continuation. So this is a trend strategy, which means that the targets are massive, the strike rate's low, it's about 30%, whereas Phil's strategy is a scalp strategy, which has got about a 70-80% strike rate and very, very small targets. So one of them is making lots of little bits of money every single day. One of them is waiting for those big moves to bank a ton of cash. Both very different strategies based purely on market structure. Yeah. So that's basically what they are, the two. But both of them are in the group. One's called Fib Pullback, Fib PB, and the other one's called Lazy V2, because there were two versions of it. So that's those. Right, so what we're going to cover today is the breakout strategy. So which pairs do I test them with? I can't remember. The pullback one I'm only testing on yen and Swiss. The Phil's one, I'm testing on everything but yen and Swiss. So basically, yen pairs and Swiss pairs tend to be very trendy. When I say they tend to be very trendy, when they're trending, they are big trends. Yeah, so they make a lot of money. When they're not trending, they're the same as everything else. They chop you to bits. So it makes sense to run trend-based strategies on trending pairs. But the problem, and this is the problem with trend strategies and why I'm a mean reversion trader, and I did a video about it on the website. I can't remember which one it is, but if you haven't watched it, it's worth watching, because it explains why I do what I do and the way that I do it. It is back here somewhere. Yeah, mean reversion versus trend trading. Which should you be doing? Basically, when you're a trader, it's everything you do as a trader is about probability, and it's about managing risk and applying risk around probabilities. Yeah, so it's all to do with maths. Everything to do with trading has got to be done to do with maths. It's got to be, every edge is statistical. So if you are not applying a statistical edge to your trading, you're never going to make it, because you're flipping a coin and gambling, which is, sometimes it works out, but it won't work out long term. The market spends around about 70 to 80% of its time either in a range bound state or in a state of mean reversion, meaning it's doing an orderly thing, market structure style thing. So as long as you are a mean reversion trader, as long as the market is in a normal trend or a range, you can't help but make money, because what you're doing is you're waiting for it to go up and you're taking the opposite direction. So mean reversion trading is operational 70 to 80% of the market days available. Yeah, so 365 days a year, 70 to 80% of those are spent either in a mean reversion state, moving in a direction, or in a sideways state. So it makes sense to be a mean reversion trader, because you've got opportunities 70 to 80% of the time. If you're a trend trader, you have to sit through 70 to 80% of the time getting killed. But when it goes, you make a lot of money. But most human beings can't do that. You can't sit there just hemorrhaging cash. It's like, we call it, it's a horrible term, but death by 1,000 cuts. You know, it's like cut, 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 cut. It's not nice. But that's what you're doing. This is why people using stop losses get murdered all the time, because if they're trying to, you know, everyone says the trend is your friend. Every retail trader has that saying. Yeah, the trend is your friend when it's trending, but 80% of the time it isn't trending. So who's your friend? Certainly not the trend, because it's killing you all the time. Breakout strategies are the start of a trend. That's literally all a breakout strategy is. It's the very first leg of a trend. Yeah, it's an accumulation break. So breakout strategies and trend strategies have a very, very low strike rate, unfortunately. So, but that's what we're going to look at today, is one of those. And as you can see by the equity curve, this is running on the euro yen on the 1 hour chart. It's a fairly decent equity curve. So what I've done, I'll show you the EA. This test is only halfway through, but I'm going to stop it because I just wanted to demonstrate the strategy. You can see there we've done 55k on a 100k account, so it's a 50% return, 1.36 profit factor, pretty good. It's taken 11 grand a drawdown, around about 10% a drawdown. Strike rate is about 40%, which is actually pretty good. I would expect it to be sort of 35 to 40. So, morning from a snow-covered Midlands, AZ. I know, it's bizarre, isn't it? I live in the south. We don't have it. We just get the cold, but we don't get the fun with the cold. Morning forex fire. So basically trend, Lucas, to answer your question, trend pairs, yens and Swisses. You can also find other things that are trending, but unfortunately you don't know they're going to trend until they trend, so you can't actually pick them. Anyway, best thing to do is test, and then you'll find out what works on what. So basically what the EA does, so go through the settings quickly. All this EA does is it says what time do you want me to start, what time do you want me to stop, and I will pick the high and the low in that time frame. Yeah, so I've got it set from 7 a.m., which is 5 o'clock in the morning UK, to 10 a.m., which is 8 o'clock in the morning UK, right? And then what it does is it literally at 10 a.m. broker time, it places a pending order at the high and the low, yeah, pending breakout, and a stop loss at the opposite side. So it's exactly the same as the ORB EA, the opening range breakout EA for stock indices, in the fact that we go long and then we put our stop here. If we're wrong, we go short and we put our stop here. Yeah. But what I've done is also on this introduced a cancel pending order when trade is triggered option. So what you can have is you can have that range triggered at 10 a.m. in this case, and then it will go long. And if it makes money, brilliant. And you can cancel off that order. But if that doesn't work out and it comes and hits your stop loss, you can also just flip short and have a stop there. So the idea being, there's only 3 things that a candlestick can do each day. And this is the whole premise of breakout strategy, okay? There is only 3 things that you can do. So let's look at some of these trades. Okay, so what I've got the EA to do is basically draw the lines at the ranges and put the actual size of the range as well, because we've also got an input here for size. Yeah, so this is a percentage of ADR. So the minimum size of the range needs to be 10% of the ADR. In this case, I'm using half of an ADR as the maximum size. If you get a range that's that big, you don't want to take a breakout. Yeah, a range has got to be small. Breakouts have got to have a small range accumulation to break out from. You can't break out from that, because you're just never going to hit target, are you? So it's got minimum, maximum. And there's a TP as well. I don't use TP, but you can have a risk reward on it as well. So those are the settings, basically, very simple. And obviously, as it's this Swiss Army knife EA, you've got all the other settings as well for trailing stops, exit end of day, exit at money, exit after time, partial close, etc. Yeah, so all the other normal settings in the Swiss Army knife are in there, apart from the trend ones, because this is a breakout strategy. And before you say, have you tested it with trend direction? Yes, doesn't make any difference. So that's basically what it's doing, placing those orders. So when you get a range, what you're doing is you're saying, I want the market at a specific time of day, London session here. So let's go back to basics. There's 3 sessions a day: Asian session, London session, New York session. Okay, so the London breakout strategy, which is probably the most well-known breakout strategy, is you take the Asian range and you take a break of it in London. Doesn't work, but you can test it with this, because you can test it. You know, this EA does that. But the problem is there is no open. So the reason I built the opening range breakout EA and the stock index hedge EA is because with indices we have a confirmed edge. At 8 a.m. every day, without fail, the DAX and the FTSE go nuts. At every day at 2:30 p.m. UK, all the US indices go nuts, because there's an opening bell. The market opens, the exchange opens for general trading. Therefore, the volume increases and you get spikes in movement and stuff starts to happen. With forex, it runs 24 hours a day, 5 days a week. There is no open that you can select, but generally the market tends to pick up around about the London Open. It tends to pick up around about the New York Open. So somewhere around 8 o'clock, you tend to get extended volatility on forex. But sometimes you'll find it will go at 7, sometimes it will go at 6:30, sometimes it will go at 9:30, sometimes it will go at 10. There isn't a specific time of day where you can say for every single day without fail forex goes nuts at. Yeah. So what it's doing is it's saying we'll build a range with whatever time frame we want. And it doesn't have to be the Asian range. You could use the London range. You could use the first 2 hours of London. You could use any time range you like. This is the whole purpose of the CA. You can test breakouts at any time on any time frame. Yeah. So 3 things are going to happen. 1, either you're going to get a rotation day. So there's only 3 types of day that exist. Rotation days, where the market just does bugger all. Let's look at them. We can see one very clearly on the DAX. Yeah. This is rotation. Up, down, up, down, up, down. Any person trading any style of breakout strategy on these days is dead, because its market is in what's called rotation, which means that there is equilibrium, there is balance, there is agreement on price. Yeah, it won't do anything until there's disagreement on price or there is a reason. Mercedes have just launched a new hydrogen powered vehicle. It's going to be half the price of everything else and zero emissions. Bang. Mercedes stock is going to fly. DAX is going to take off. There's a reason for a breakout. There's a reason for a movement. Yeah. So they haven't, by the way. I just made that up as an example. I don't know. Maybe they have. Someone has. Anyway, that's not the point. So basically, you got this range. So it's either going to go into rotation, which means you're going to take a breakout, you're going to stop out. Then you're going to take a breakout and you're going to stop out. So there's the option of only taking the first breakout and cancelling the opposite side, or taking the first breakout, and if that fails, see if it goes the other way. So what you're going to get is either a rotation day, or you're going to get a fake out. And a fake out breakout is basically where we sit around and we go one way, but that way, this is price discovery. So remember going back to some of the areas, the early videos where I was talking about balance and price discovery, that sort of thing, how the market moves. If you get a breakout, which is a failed breakout, what often happens is the market is trying to go long and there is not enough demand to go long. Therefore, the supply of shorts overwhelms them, which brings it back into that range. What will often happen then is the breakout will be attempted to the opposite side, and that will work. Right? So on days where you get a failed breakout, you will often get a break in the opposite direction. So when you've got your range set, if you take that one and it doesn't work out, you're going to stop out and then you're going to go short. And if the short is more than the size of the range in distance, you have an opportunity to get a break even or profitable day. Remember, this strategy only trades once a day here, or whatever time you set it to go is the day. It only takes that one trade, right? The second type of trade, or the third type of day rather, that you can have is a clean break, where it just goes, price discovery works, and we trend for the day. Yeah, a la that. Yeah. So there's only three things that can happen in a day. We are rotational, we have a failed breakout, or we have a breakout that works. Yeah. So there's only three things. It's not binary, it's trinary. I just made that word up. I have no idea what it is. What three? But anyway, so there's three things that can happen. So the idea of this EA or this strategy is that you are playing the probabilities of three. Okay. So what you want to find with a breakout strategy like this is what occurs more often on this specific instrument, going back over time with the times that I have set. Yeah. So if we find that the vast majority of days are clean breaks, let's say more than 50% of the days, it's a clean break. What we want to do probably is cancel the opposite pending order. So we'll go long, and the ones where it works, we make a load of money. But the ones that don't work, we just stop out on them and go, that didn't work today. Because if the other half are rotational days, most of them, we don't want to be doing that, because we're just going to stop out twice on the day. Morning CK, morning Yusuf, how we doing? Travel, fake out equals turtle soup, SMC, I need to stop. Yes, you do, because you're talking bollocks. It's just a name for a false breakout. It's been around for 200 years. Yeah, someone's just selling a course on it and made a name. I can come up with a name for it. I can come up with a name for that action happening. It's basically, it's price action. But I can call it turtle soup and sell you a course on it for $2,000 if you want. You realize you are just buying the same thing over and over again. Again, there's a video on the website about that. But anyway, so there's three things that can happen. So this is what the EA is designed to help us test. So as you can see, we'll go through a few trades. Great example of a clean break there. So the range that we're looking at is 10 a.m. to 7 a.m., which is that. That is the range. It was 260 points or 260 pipettes. Yeah. So there's your range size, 260. We're ignoring all this stuff because the range we decided to target is that. Yeah. So that's basically what it's done. It's taken a clean break and basically it closes it out at the end of the day. Now, the other option we have in the EA is to use a TP. So again, these are all things that can be tested. Is it better to use a risk reward of 200% of our range, i.e. a 2R? Yeah, because we have a stop loss there on our breakout. If we set our TP at 2R, is it better to do that? Or is it better, as I have it set, to just let the thing go? And what my settings are here is close at end of day. So at 2300, yeah, it closes the trade out. Again, we can test. Is it better to do it only if the trade is in profit? Because if we're in a rotation and at 2300 we're sitting in drawdown, is it better to shut it with a small loss, or do we hope that tomorrow goes? Yeah, there's all these things that can be tested, but those are the options that I'm using, is get out at end of day. So the whole purpose and idea of this strategy is we want a clean break. So how many times does that happen? That's what we need to test. Here is a great example of a false breakout. Yeah, so there's our range that we did. We put a pending order here and a pending order here. It broke to the downside, moved up, and then broke the opposite way. So that is the second option, remember? So we've got rotation, we've got false breakout, and then we've got succeeded breakout. So there's a great example. Now I've got it set to automatically cancel the opposite pending order. Now, if I hadn't had it set to opposite pending order to be cancelled, I'd have got a lovely clean break in the opposite direction. So the loss there would have been easily recovered plus that much profit. So that is your daily profit. Good. Yeah, the rotation day, great example, 2 rotation days back to back. Yep, so there's our range. We just went up a little bit, went down a little bit, didn't really go anywhere, and we ended up back roughly where we started. Range was there, we pushed up a little bit, pushed down a little bit, came back to where we started. These days, you cannot make money with breakout strategies. Physically impossible. It hasn't broken out. Yeah, you can only make money in a breakout when the market breaks. Those days, here, it did end up lower, but what it did was break you short, break you long, break you short, break you long, break you short, break you long, break you short, made a profit. Brilliant. But it didn't get back the 4 to 5% loss there. It got back 1% of it, maybe. Yeah, that is also a rotation day. Any day where the time period is just choppy, yeah, not going to work. So for me, the best way to use this EA, there's 2 ways I think is good to use it. One of them, won't surprise you, is manual intervention, which is what I think is probably the easiest way to do this. So the best way to do this is, I think, to wait for news days and trade the pairs with news, because news causes breakouts. So if you've got a big news event coming up, like today, we've got the CAD CPI coming up today. I would expect today the Canadian dollar to rotate. Yeah. So what I would expect today in the UK session is this, because no bank or institution in their right mind is going to start a large move on the Canadian dollar if there is a massive fundamental shifting event coming out at 1:30 this afternoon. So for me, what I would be looking at here is saying, right, at 1 o'clock, let's look at the range so far during London, and we will go for a double-sided break at 1:30. So at 1:30, the Canadian dollar news is going to come out. It's either going to clean break and fly, or it's going to clean break and fail and then break the opposite direction. News causes a lot of fake outs, doesn't it, a lot of the time, because they are basically just looking for liquidity grabs to run with. Yeah, so it makes sense to have a double-sided breakout at news, but you've got to be in the trade really before the news, as we know, because news causes slippage. So these pending orders that you're asking for here are not going to get triggered at the right level. Euro yen ADR, yen's on the move again. Yeah, more power coming into this yen. Glad I got out of that New Zealand dollar yen trade. Could have made a nice profit on it yesterday, but decided to bail because I'm not convinced that this isn't a rollover starting on the yen now. So that's one way you can use it with news breakouts. The other is obviously, as standard, using a period of time. Now, the problem with this is we don't know when it's going to go. It's going to go at some point. So using a maximum range size is going to mean that you've got a fairly decent size of range. You're not going to get any huge ranges in. And then just let it go at a specific time of day. Now, if you're going to do this at a specific time of day, you need to focus on pairs that are moving in those times. So for the yen pairs, obviously the Japanese yen moves in the Asian session. So if you look at this euro yen, it either moves during the Asian session or it doesn't. So where we have big ranges, big movements during the Asian session, that is a news event. ADR is going off. I think this is, yeah, euro yen, big move on the yen at the minute. So when you've got news events in Asia, you're going to get a big move. We don't want to be trading those. We want to be trading when there's no massive news or movement during Asia, and then we're going to try and take those breaks. Yeah, love a rotation day, their example. Yeah, 80% of your 70 to 80% of your days are going to be partly rotational. So what this strategy is doing is it's making a fortune on those days. Yeah, you see there, if you'd have chosen the whole Asian range, it would have been that big. You would have got a 1-to-1. Because we chose 3 hours, you actually got probably a 2 or 3-to-1 there. But so this all needs to be played around with settings wise. So I'm just going to run this test on the euro yen. Now, with one important thing to bear in mind with breakout strategies that use pending orders, if they use a pending order, any strategy that uses a pending order, you have to run on tick. Okay. You can run on control points. Let me just do a quick test from 2023 to 2024 to show you the difference on control points. Okay, so I'm just going to run this on control points, not in visual mode. Just stop that. I'm just going to run it as a standard test, just so it runs quick. Yeah. So that is the report for control points. More ADRs going off on the ends. And then I'll run the same test on tick. And we'll compare the results. Now, you see how slow it is, obviously, running on tick. There's nothing we can do about this. That, unfortunately, is it. But when that's finished, we'll compare the results just so you know what the difference is. But with breakout strategies, when you're using control points or open prices, it's using the close of the candle price only. And on control points, it's using the time frame below. So if we're running on a 1 hour test, we're actually using 30-minute candles. So basically, whenever you're using control points, you need to look at the time frame you're on, and what you're actually doing is testing on the time frame below. Yeah, which is why it shouldn't be considered for most strategies as good. But what I find with most strategies, because they use candle close, it doesn't really make any difference. With pending orders, if the hourly candle pushes up like that and the 30-minute candle closes there, although it would have on tick triggered that order, the 30-minute candle close was there and there, therefore that trade would not be triggered in the strategy tester. So if you're using low time frames like M15, you can probably use control points to test. And this is something you just need to run a couple of tests on and compare the results as usual. We've covered all of this. But if you're running on an hourly time frame, the difference between an hourly and a 30-minute candle is quite a lot. The difference between a 15 and a 5-minute candle isn't actually massive. So it might be better to actually run these tests on M15 rather than hourly, but we'll see. So those are the results. So let's just quickly grab that. Yeah. So this is running the test on control points. We made 9681 loss out of 209 trades. On tick, we made 9669 loss out of 209 trades. So that's actually pretty close, isn't it? 34.9% strike rate. 34.9. Oh, okay. So scrap that. It looks like control points actually are as good for testing as tick level, which I'm very surprised about. Normally, when I've tested on breakout strategies, that isn't the case. It's virtually the same, isn't it? Okay, well, that's good. Right. Verify that yourself. But it does look to me like control points are going to give us the same results, which is great. So we can do longer testing much, 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 much faster. I'll have to verify that because normally this doesn't work this way. But I'm going to run the test on the Euro Yen. Okay, so just to show an initial test and result. Yusuf, what do you think about building a daily position trading strategy which enters on the London Open, depends on the market sentiment, goes against retail sentiment? Tried it, doesn't work. I built it. I tested it years ago. When I built the, not years ago, actually within the last year or so, I've got an EA which trades against sentiment. I couldn't find a way to make it profitable at all. Anything you're doing with position trading intraday has never ever worked for me. The reason being is, let's say for example sentiment is long, you short at the London Open, right? If it doesn't work out and it goes up with sentiment, you take another trade, you take another trade, you take another trade. If that closes at 150 ADR, yeah, because it's going in line with retail sentiment, the loss there is just too much to recover long term. The equity curve has bits where it goes like that and then it does that. Just doesn't work. I've tried it. I've tested it loads of times. All sentiment is a coin flip. Yeah. Some days trading against sentiment works. Some days trading against sentiment doesn't work. But if you're trying to position trading intraday, does not work. Position trading is a swing trading strategy over multiple days. I've tried it so many times on 5 and 15-minute charts. What you're doing is, let's say, for example, the day that you get in on that M5 reversal alert or whatever it is against sentiment, whatever, that first trade that you take, yeah, is the start of a 6-week squeeze like we've had on the US dollar CAD. You are getting in on the very first day of something that is going to go against you and blow your account within days. Doesn't work. You can test it yourself. Use the position trader EA on the 5-minute time frame and use a 51:49 RSI setting. Basically what that's doing is basically saying, get me in. Yeah, get in on the 5-minute time frame and space your entries quarter of an ADR apart. Yeah, you'll see how quickly that blows. Doesn't work. You've got to space your entries, and intraday, if you're spacing your entries 3/4 of an ADR apart at least, you're only going to take 2 trades a day. So the first one works, the second one you get into, if it closes down there, you just take a massive loss. Doesn't work. And also the other problem with what you said in your second part of your comment there is enters every day if there's a 90% retail long. Yeah. What happens when the sentiment drops below 90% and now it's actually 40% long? So you should be trading the other way. Yeah. Do you see what I mean? All you're doing is you're flipping a coin to press a button. But it doesn't work. I've tested it. I built it. I did it in the live rooms. You won't be able to find it, but I built the EA in the live rooms. And we tested this exact strategy. We live forward tested it and it just lost money. I'm just going to see if I've got it. There it is. So it's called retail sentiment. Sentiment. It's called sentiment basic. Okay, and all this does basically is it's it uses a lookup of my retail sentiment on the website. And if it's over, where is it? There you go, sentiment percent to trigger an entry. So you can select the sentiment number and then you can either trade with it or against it. Yeah. And then what it did was it would either get out at the end of the day or it would scale in. Yeah. But the problem with it is retail sentiment changes. It can flip from being 80% long in the morning, then a news event hits and it's 80% short in the afternoon, because that news has flipped sentiment 100%. It stopped everybody out because there's a massive news spike and everybody's gone in the other way. So you take a trade in the morning in against retail sentiment, by the afternoon you're with retail sentiment, and then retail sentiment will stay that way for 5 or 6 days. So then what do? Get out, stay in, scale in. You know, it's a completely different trade scenario. Just doesn't work. I tried so long to find a way of making money using retail sentiment and I couldn't do it. I tried entering at the beginning of the day against the sentiment and closing at the end of the day. I tried waiting for a reversal alert against retail sentiment and then getting out at the end of the day. I tried multi-day holds. I tried stop loss based strategies. I tried waiting to go in line with retail sentiment and then shorting against them after it had gone with them to entice more of them in. I tried everything. There was not one way of getting out of it profitably, because all you're doing is you're using an indicator to enter the market. The indicator is making the binary decision for you. Just press the button. Yeah, use that. Use anything you like. But all it is a button press. And we know that getting into the market is nothing to do with making money. It's how you get out of the market. And unfortunately, retail sentiment changes the signal every single day. So, you know, it just didn't work. But anyway. And also, the other thing is it's reliant on a data feed. And sometimes that data feed would screw up. And it just doesn't, you know, you can't back test it either. Yeah. So what we did was we forward tested it, because you can't back test retail sentiment. There's no historic. So you have to live forward test it. It just hemorrhaged cash, unfortunately. Anyway, when we need, sorry, let's just look at this result. When we need for breakouts a clean break anyway, why we risk the whole range size and not 50%? I've tried that. You will get stopped out on the successful breaks. So what happens? Think of market structure. So we break out, we pull back. We break out, we pull back. We break out, we break out, we stop out, we miss it. Yeah. Breakouts do that. Yeah. So if you use a stop, the smaller your stop loss, the lower your strike rate, the more of them you will miss. You can try it if you want to. This EA doesn't do that. Opening range breakout EA, just use the ORB EA if you want to, and you can test that theory. But what you will find is, and I've done that because when I was developing this EA, I had a stop loss input, and I decided to remove the stop loss input because the stop loss input was basically screwing it. It just made it way worse if you reduce the size. But what course would you suggest to learn programming? I don't know. I don't know about programming courses. I can't recommend one. I've never done one. So that is the equity curve on the euro yen going back to 2020. So when the yen is in a lovely trend, it's doing really well because it's just breaking out every day and continuing its trend. It's lovely. That is stagnation. So it worked for about 1.5 years and stagnated for 2.5 years. Yeah. So not amazing, but not bad. Yeah. It's profitable. It's made 42 grand over 4 years. Test it on the pound yen. This is running on the hourly time frame. It shouldn't matter what time frame you use. Hourly is obviously a bit quicker than everything else, but a breakout's a breakout, isn't it? So the higher the time frame, the better. So this is where it makes its money. Yeah, you're going to have these big winners, massive range bound period where it just went into rotation for days and days and days on end. Yeah, then it started breaking out. Then it went into rotation. Yeah, not great. It's profitable. It's not profitable. Yeah, so 100% strike rate so far. We haven't lost any money. But imagine starting day one there. You're going to be drawing down by 16 grand, something, 16%. 28% drawdown max. Quite a lot. US dollar yen. So again, stagnation. Again, it's a breakout strategy. Don't forget the strike rate is always going to be somewhere between 30 to 40% on a breakout or a trend strategy. So you're going to sit through a lot of stagnation. But when it's trending, it's going to make a lot of money. Then it goes into stagnation again. So there's periods of time where this strategy just is beautiful. But there's a lot of time where it's just stagnant. So this is the problem, I think, with the strategy overall, but I don't know if I'm using the right settings. So this is using a trailing stop loss, and this is cancelling the opposite order. Yeah, so it may be that we shouldn't be using a trailing stop loss. So this is using half an ADR stop, trailing stop basically. So when we break out, I want to make sure we protect that. And I'm getting out at the end of the day. I don't know if it's better to get out at the end of the day or it's not better to get out at the end of the day. So I'm just going to remove the trailing stop and just see if that helps the strategy. So anything that breaks long and flies or short and flies, we might be missing that profit because we're using a trailing stop loss. So let's remove that and see if that increases the profitability. Or more importantly, and the thing with this strategy that needs to be dealt with is removing the stagnation. We want more of this, not stagnation. But this is the beauty of this type of strategy, and all stop loss based strategies. They don't lose money long term. They just don't make any, which is obviously no point in having them. No point in trading a strategy that's not profitable. It's just going to go sideways. So there you go. So we made 50k there. So 50% return, 1.16. Not amazing, 900 odd trades with a 37% strike rate. So there's lots of things we can do to test this, but I'm using these times here. So I don't know what the best time to use is. And again, there's a million different times of day you could decide to take these trades. I'm using 8 a.m. in the UK and trying to take a break of what's happened during the latter part of Asia. I don't know if that's the best thing to do. I'm going to try this quickly on a pound US dollar pair. I'll put this EA out, obviously, so you can do your own testing on it. But I'll try this on the pound US dollar and see how it runs. But Outro posted that video from this Rene guy who's got, this pretty much is the same thing, isn't it, this EA? But he seems to be only trading specific pairs with it. And I don't know what pairs he's trading, because this video that I got shown, which was 15 minutes long, didn't actually show what it's being traded on, just showed the principle of the strategy, which is nothing, it's nothing new. But odd yen, pound US, US yen and euro yen are overall profitable, but I don't know what they're profitable with, what settings. See, that's the pound US dollar. Great for prop, isn't it? If you catch that part, but it's not making a massive amount of money. But then again, it's not using a lot of risk either. So it needs to be played around with, but it's got potential. But it's exactly the same as the ORB strategy. Yeah, it's a breakout strategy. Remember, there's 3 types of strategy: trend, breakout, and mean reversion. This is a breakout strategy. The nice thing about this EA is you can pick any range you like and break out of it. And I don't know whether it's best to maybe not use the opposite side. So at the moment, what we're doing is we're cancelling those pending orders. So we got a range built. When we break, we shut that. So all the failed breakouts, the failed breakout reversals, we're missing all of those trades by having that set to true. So if I set that to false now, what we'll do is we'll take a breakout in both directions. The downside to this is in rotation days, you're going to get 2 times the loss. In breakout days, clean breakouts, it's not going to affect you. In failed breakouts, it should make you more profitable, but it's got to make you more profitable than using twice as much loss on the days where we have rotation. So roughly the same result. Different equity curve, same rough profit, break even. It's made $1,950 profit, or a couple of grand. Yeah, with a 35% strike rate. So it's just trying to find ranges to trade. Another range which might be good to trade is the 10 a.m., which is the London session, to well, what people seem to class as the London session, but it depends. We don't know when it's going to move, do we? To the New York session. So we'll take the range of London, and at New York Open, we'll trade that breakout. I'm going to do this on the 30-minute time frame, so I'm just going to adjust the exit to 22:30, because if we're using 30-minute candlesticks, we need to close on a 30-minute candlestick. I'm just going to visual test this to see what it's doing, make sure it's doing what I want. So ranges are too big. So what it's saying is basically in the London session, you've moved more than half an ADR, because I've got half an ADR max range. So that's not a good one, is it? So we've moved half an ADR, more than half an ADR, more than half an ADR. So what we're saying is take a breakout of a contracted London session. So this isn't a bad strategy, is it? So have we got a contracted London? Yeah. Okay, let's see if New York can wake us up. What did New York do? That. Didn't do anything, because it's a rotation day. The trouble with this strategy is you're missing all of this price action throughout the day, and you're basically hoping New York is going to go mad. That's what this strategy is. It's the let's hope New York goes nuts strategy. It just doesn't move enough. Yeah, London is where you need to be breaking out. All the movement comes in. You need the London. What you need with a breakout strategy in this case, I think, is a good London session followed by a good New York session. Yeah, that's what we want. We want to grab this big trend day. So we need to be trading at the start or around about the start of London. And that is not an exact science to pick the start of London. That one was all right, look. But it might be better to use a risk reward. So let's try this type of strategy, but let's try using a risk reward on it instead. So we'll go with, let's just go with a 2R. Range size. I mean, if anything, if something's already moved more than half an ADR today, are we actually going to get enough movement? I think that half an ADR is probably right. We want a contracted range, don't we? So let's try this and just see if what happens with a TP. So what we've got now is we've got that is the range, and there is our take profit, which is 2R. Yeah. See, we don't get anywhere near target most of the day. That one did, look. There we go. Right, so what's that? What happens at 3 o'clock in the US? News. Yeah, so this is news. Now, that means I'm highly unlikely to get that, because I'm going to get slippage, which means I'll probably get entered there, which means that I won't get to 2R. In this case, I would have done, because it's all right there. But you know, this is basically what this strategy is doing. It's trying to grab these news breakouts when they occur. There's a good one there. Unfortunately, we wanted to take that range rather than that range. See, you just don't know when it's going to move, and this is my problem with this strategy. It seems to be curve fit to specific instruments that he's tested or have been tested that work. You can't do that. It's curve fitting. Now, if you curve fit, if you get an instrument, so let's say, for example, we test 28 FX pairs, gold, oil, and all the indices with this, using a specific time period, and we get something that is profitable, what you then need to do is robustness test that by using system parameter permutation tests on it. So let's say, for example, I mean, it's just not a pretty equity curve, is it? This one, but it's not bad. Downside limit risk is limited on this because we're using a stop loss and we're using a risk reward ratio. So I'd expect this to come out at pretty much break even at the end of the day, because that's what stop strategies tend to do, unless this does have a higher strike rate. It's going to need a strike rate of 33% plus to have a chance of being profitable. It could be that the best thing to do is not to close end of day. Use a 5R target and not close end of day. I mean, there's so many variables, isn't there? It all needs to be tested. But yeah, see, we're back to where we started, because it's a 2R stop loss related strategy. We covered this in the probabilities of trading. Virtually all risk reward based strategies are a zero sum game and end up back where they started. This one's not doing too bad, but only because of that. There's an outlier of a good month there where we had a lovely run. The rest of the time, it's a load of shite. That's not working, is it? So this isn't a good variation to use. So yeah, it needs to be tested. So when we find one, so if we just go back to, what's the defaults on it? Oh, I've used that. So let's go back to 7 a.m. to 10. No TP. Half an ADR size maximum. Using some money. Oh, not that much. And we want to get out at 11 o'clock. It might be better to get out a bit earlier, because we quite often get a little pullback at the end of the day. So it might be better getting out an hour earlier than that. But we'll try that. So I'm just going to try that quickly on a yen pair again. Run it on M30. Just make sure this is doing what I want. Yeah. Okay. Let's run that on normal test. So when we find an equity curve that looks okay, that we are happy with, what we need to then do is do system parameter permutation testing. So what you really need to do is kind of pick, I think, half an hour before and half an hour after each start and end. You need to also then pick the exit time, being at the moment it's 11 o'clock. So pick 10:30 and 10 o'clock. Yeah, so we've got 3 parameter permutations there. We've got 3 parameter permutations there and 3 parameter permutations there. Because let's face it, this is the only parameter permutation, isn't it? A range definition and an exit end of day. So once we get a decent equity curve, a system parameter permutation test needs to be run on those. The problem is you can't run system parameter permutation tests on time. So you'd have to run individual tests on all of these, unfortunately. So it's kind of a bit of a manual testing process, this one, but that's not a bad equity curve. But if we get that out and stick it in second desktop, yeah, stick in strategy quant or quant analyzer and look at the stagnation on it, you're going to find it's, I think, pretty ugly. But you know, I don't know if I'm testing the right settings by any means here, because I've never really tested it in detail. So let's see what it's like. So on paper, it's one of those strategies on paper that looks really good. 44k, lovely. Drawdown 16, so you're making 44% for a 16% drawdown. Nice. Return on drawdown ratio 2.75. Anything above 4 is phenomenal. Anything above 2.5 is good. So it's all good. You've got winning months, losing months in there. So we know that it is a decent strategy that is not going to produce general profit every month. No strategy does that. If it was making money every month, I'd be saying throw it away because it's just not possible. But so that all looks pretty decent. So overall, looks good there. When you look at the equity chart, though, and put stagnation on, you've got 326 days of stagnation there. So, you know, it's a year. It's basically lost money for a year. And this is on a trending pair, which breakout strategies are meant to take advantage of. Yeah, because trending pairs are constantly making higher highs and higher lows. Therefore, to actually get to the higher high, they have to break out to it. So breakout strategies work well in trending instruments. Yeah, it should be working well. Let me just move this over to time. So that was January 24. So the entire 2024 period on the euro yen which is basically what you see on the chart there, it stagnated during that beautiful trend. Weird. That's where you would expect it to make money, wouldn't you? So there's something not quite right with the strategy, which is why I said when somebody put it in there, I said it looks curve fit to me. It looks like the exact settings for that instrument based on that historical data have been selected to make it look good, which is great. If that can be robustness tested, so let's run a quick robustness test on it. So that's the result over that period of time. So let's go back to 2016, if I could type, and run it to 2020. So this is an out of sample test. So it'd never been tested over this period. We made 44 grand during the test period post-COVID. This is the pre-COVID test. Yeah, looking good. Sometimes. Beautiful. This is why it's robustness testing is so important, because yeah, if you test it over that period and release an EA and look at the results, everybody, they'll go, wow, you found the holy grail. Then you stick it on the chart and that's what happens. Load of crap. So we stagnated. This is a 4-year test. I would say we're going to stagnate for 3 of those. After taking a loss, then we're going to stagnate. Now it's starting to run up again. This little spike here is COVID and post-COVID, beginning of post-COVID. Everything started to go nuts, didn't it? Volatility increased. So it's got potential, but I think settings need to be played with. The problem with this, and as I said, I built this EA and to test this type of strategy quite a while ago when I was developing ORB for forex. The reason I kind of stopped was because I couldn't find a time of day that is right to use, because it varies. That day it went there, not there. However, that day it went there, not there. Yeah. Every single day you're going to have volatility enter the market, but that volatility doesn't enter at a specific time of day. So how do you develop a range? Let's try it on gold. And again, you know, I'm trying it on gold with these settings. I don't know if these settings are right, wrong, or what. You know, I have no idea. But let's try it on gold. Let's go to 2024. So let's run an 8-year test on it. So this is an in-sample, out-of-sample type test, I guess. Let's see where this one goes. Here you can see which pairs Rene trades with the range breakout. Here, where? I think it's US dollar yen, pound US dollar, gold, and US 30. Yes. So yeah, I mean, I'll put this EA in the in the group, and you can go and test whatever he's doing. I don't know. I haven't looked at him in any detail. I don't know what he's doing. This is a strategy that's been around for decades. Breakout. It's picking a time. So whatever he's using as his times, whatever he's using as his settings, use that and test it. See if you come up with the same results. But after you've done that and you've got whatever the results are, robustness test all of those results to make sure that you've got different variations on them, because you're not going to get exactly the same in the future. So test them with robustness and see how they work. Looks good on gold, doesn't it? But again, you know, I have to ask the question, what is the relevance of 10 a.m. my broker time and gold? And why 3 hours, not 5? Yeah. This is what I mean. I can easily make this fit a curve perfectly. If I change this to 5 hours instead of 3 hours, I'm going to get a completely different equity curve. If all of them work, so if I go get me in at 10 in the morning and use the 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour, 7 hour, 8 hour, 9 hour, and 10 hour ranges, I want to test every single one of those for robustness. If all of those come out with an equity curve that makes profit, this strategy works, and it will probably work in the future because it's got 10 robustness tests done. That's the testing that needs to be done with this. But it's quite labor intensive because you can't parameter permutation test time. Because time is it's what's called a string input. But it looks pretty good. He made 85 grand in 8 years, so 10 grand a year. He took 20% drawdown on the account. Look at the profit factor, 1.14. It's a 4. So the return on drawdown factor on this is 4. Oops. Which is not too bad. It was good, but it's just not a very pretty equity curve. Where's my tester gone? So yeah, 19 grand worth of drawdown, 82k profit. Decent months. And the losing months are smaller than the most of the winning months, which is good. It's all I mean, it looks pretty decent, doesn't it? But stagnation 557 days. Are you happy to sit there for nearly 2 years making nothing? In fact, not just making nothing, are you happy to be losing that much money over 2 years and not generating a penny in profit? I'm not. That's too long. It doesn't work for me at the minute with those settings anyway. Long term, yes. And I'm sure, you know, what this is going through now is this, isn't it? Yeah. So what you're waiting for realistically is a couple of outlier months. Every year or so, you're waiting for a couple of outlier months, which are going to generate big profit because there's strong trends extended. I mean, it's not even volatility related. Look at the volatility now. Look at the volume now compared to what we used to trade pre-COVID. It's scary how hard this market is at the moment compared to what it used to be. But anyway. So yeah, I'll put it out and you can test it. US 30, another one. So US 30, I mean, why not use the opening range breakout EA? First of all, on the US 30, you're trading pre-market ranges, which I mean, the times on that you'd need to have set at 1430. So you'd be trade. I mean, what range do you trade? How much of the Globex session would you? I would probably want to trade 4 hours of that. So I would probably say that is what they would class pretty much as the Globex session. I don't know. Let's try it visually and just make sure it's. Yeah, see, that's the Globex session. Is basically because that's 4 a.m. US. Globex starts at midnight, so you can only actually trade 4 hours pre-market. This is the pre-market range on the US indices, so you can only trade those 4 hours. So it's basically trading the entire Globex. So what you're basically saying is this strategy is a Globex breakout strategy, which is absolutely fine because quite often that is a very, very good strategy to trade. If you trade above the pre-market, what they call the pre-market high, stay long. If you trade below the pre-market low, stay short. Gap fills are obviously going to be part of the thing as well, but let's run that quickly and just see what that does. The hell was that? That was what was that? Must have been a gap or something. What trade number was that? 891. No. 7th of September. Oh, look, 7th of September until 2008 is a data gap there. From 2017 to 2018, September to January 2018, there's a data gap. It made 41 grand. Something happened there. So need to scrap that. Tests can only run from that time onwards. So January 2018, we can't test before. Let's run that again. I saw a range breakout by someone that used ADR rather than time-defined ranges, and it worked, or percentage of ADR. Yeah, I've done that. I've built an EA to test that as well. So basically, if you find ADR, there's many ways to do ADR breakouts. But the fact of the matter is it's a breakout strategy, Mark. It's the same as every other breakout strategy. It doesn't matter how you define the range. I can find a way to make a profitable equity curve with anything. A breakout strategy works when there's a breakout continuation. So it's the entry method has got nothing to do with making money. It's the exit method. The exit method is letting it run, which is this equity curve. Yeah. If you use ADR, you can say, I want a range of no more than X ADR. So what it will do is it will say, look back X number of candles. If the high and the low is within X, place a range and take a breakout of it. If it continues to do that, it will continue to do that. Yeah. So defining the range doesn't make the strategy work because it's the breakout. So one of the ways that some people use breakout strategies, which again is something that could be changed and tested on this, is you have to close outside of the range. So I've built this, I've tested it, I've modeled it. Yes, it works. As long as it's not a failed breakout strategy, then it fails. So you just take that one. Yeah. The problem is the stop is normally at least twice the distance. So you could take that, but what often happens is that gets stopped out. Yeah, there is nothing that works more often than something else. It just doesn't happen. Yeah, the exit is based on the profit is based on the exit, not on how you define a range. I can build that out and we can test that theory. I've tested it. It doesn't make any difference. Obviously, me being a massive advocate of ADR, first thing I do is test ADR. The other thing I would say about this EA compared to that other guy, Rene's EA, is this uses ADR. Yeah, I don't think his uses ADR, does it? So I'm using ADR as min-max range. You don't have to use that at all. If you set that to 0 and set that to 5, it just won't use a range, min-max range. I don't even know if his uses a min-max range. I didn't even look at it in detail, to be honest. But there's that option there as well. No, I think he is very bonastic. Basic. Yeah. I think that says basic. Either it's a word I've not heard of or it's basic. Bonastic. So yeah, I mean, those sorts of things work. We've got loads of alerts going off. A lot of strong yen movement today. ADRs, all the yen pairs, and Swiss. Euro Swiss has also hit. There we go. I was just going to say, is that a safe haven run? This looks like a safe haven run to me. So don't try and meme revert this. This is Putin. Approved updated nuclear doctrine, whatever that means. Okay, so this is the market panicking, scared, buying safe havens, which means the indices have probably gone nuts. So DAX is dropping hard, FTSE's dropping hard. Yeah, stock market's coming down. So all the money's been pulled out of stocks and it's being pushed into safe havens, Swiss yen. So this is going to be careful trying to do an aggressive exit on this today, because we could see a 200 ADR move or more on all of these. Have we got any yens running on our other strategies? Well, of course we have. My pullback strategy definitely has. Question is, there we go. We've banked some more money on the lazy trader strategy this morning while we've been talking. There we go. Look, guys. See, this is what this is all about, this strategy, this trend pullback strategy, yeah? We've made $174 loss, $867 loss in total. We're sitting in 5.7% profit after banking 3.5 loss. This is where the money's made. This thing, if this continues today, is just going to make a fortune. So this type of strategy, this trend pullback strategy, is a payday strategy. You're not going to continuously go little bits of money, little bits of money. You're going to make big bits of money. It's trend. It's waiting for those big, strong moves to come in. So tomorrow morning, we can have a large tick on this one. And I've banked some money, finally. It's taken a while. 0.7%. Why have I only banked 0.07%? What the hell have I just banked? Oh, God. That was my TP that I set. Yeah, okay. Be careful today. Not quite sure. TASS cites Peskov on the possibility of a nuclear response by Russia. Okay. So basically, very hard to tell what is going to happen with that news. So if you try and mean revert this, so if you try and get out here and try and then get an aggressive exit on, it may it may just be a knee-jerk response, and it may happen. It may just go 500 ADR or something ridiculous today. The markets obviously are not happy with what has just been said by Putin. So if this thing suddenly sits down here today, you are going to be massively in drawdown on this. So you either need to take that profit, wait for your long to get triggered, and then make sure you re-hedge that if it drops. Because if it continues down like this, you've got to be re-hedged. It will take double the loss. But obviously this is market panic. Not massive panic at the moment, I have to say. But if it is going to be massive panic, this is going to be literally lit up like this. All Swiss, all yen will just be absolutely pummeled, or rather popped. They're all going to push very, 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 very hard. So be careful today. I just want to think about what to do this minute. I'm very, very close to TP on it. I'm just going to move my targets down to that weekly low, just to be super cautious. I'm just going to move it right down to 175 ADR. This isn't going to stop, I don't think, today. I'd rather sit in these hedges and take this $600 loss than try and get out of this today, to be honest, because I don't know when this is going to stop. I just kind of need to keep an eye on this. I don't even think it's going to stop there. Technicals are, limit orders. If this is the market panicking and driving safe havens, all the limit orders to go long there will have been removed. So there's no support resistance levels that are going to hold. It's just going to go. It's just going to blow through what it needs to blow through until they've removed all the stock that they need to remove, and then it will stop. But there's no point in using technical levels. It's pure guesswork today. So I'm just going to give it loads and loads and loads of room. In fact, there's an argument for just shutting the longs here and playing the shorts and let the shorts run. But to be honest, you're better off just taking the loss and just or rather keep the hedges so that you're not going to take loss. Because if you get the exit wrong on this and it goes, you're going to just get stuck. So just leave it. I'm just going to monitor this today. Not looking good, that, is it? This is because the US has authorized the use of their long-range ballistic missiles to fire into Russia, which was previously a no. So Russia was sitting there safe. Now Russia's not safe. Ukraine can now fire into Moscow. And obviously, Putin's stance on this is that the US is now supplying armament. Basically, US is using Ukraine as a proxy to blow Russia up, basically is what Russia's view of this is. So we are doing nothing. The West are doing nothing specifically to harm Russia. However, by supplying the Ukrainians weapons, we are subconsciously saying just blow Russia up for us. So that's what this is response to. I'm not surprised by it, to be honest, but be careful. It may just be a knee-jerk reaction, and it may not be as bad as it looks, in which case we're just going to get a V-shaped recovery on it. But these are the decision-making processes. So watch all these Swiss pairs and watch all these yen pairs for signs of reversal. Obviously, it's going to do this on its way to where it goes. It's not usually just going to go parabolic straight down, but one of these will be a potential V-shaped recovery, and it will be about 150% of ADR in this case that you're going to get out of it. But stop loss based entries, don't try and turn this into a position trade. Would be bad. Everything's going to move today, I think. Right, that's it for that basically part of the session. So what I will do is I will get this EA in the group. I just probably need to tidy up some inputs that are not used. In fact, have I done that already? Trailing stop losses here. These two trailing stops only work when you use money as a risk. If you use fixed lot as a risk and martingale, those do not work. That one does. So that's the only sort of thing with this, but I'll put a note in when I post the EA just to let you know that, because I only coded this to work on money because it works as 2 times the risk amount, and it only works if you're using a risk amount. It doesn't work if you're using a fixed lot. So it's kind of said there, but it's not particularly clear. So that only works with that. But apart from that, everything else in here will work. So yeah, I can put it out pretty much as it is. So yeah, I'll push this out so you can have a play with it. And if you come up with some decent back tests, but go and back test the stuff that you want to back test with it. So that Rene Guy's stuff, you can do that. Where do I find the members files? It's just in the members group, Sagar. So if you've linked your Discord, to YouTube, you'll have a members section. Yeah, and this is where all this is, all this stuff is in there. And if you haven't, there's instructions on YouTube how to do it. So go to posts. This post explains how to link your YouTube, and then all the everything to do with what we cover in the members streams is all covered in the in there. Yeah. See, this is the decision making process today. This is why this is so hard when things like this happen. It's a beautiful potential 3-bar reversal going on an M5. Is this just now going to come all the way back up here, or is this just going to struggle in this propulsion gap and collapse? If you try and get out here and it does that, you've got to re-hedge it. You've got to make sure you're re-hedged, because you know, if it does collapse further, you've got to make sure you're not the wrong side of this, because it will cost an absolute fortune. It'll kill it. It'll kill your month's profit. I'm up 8.5 grand so far this month. This month's been fantastic for breakouts. It's only the last couple of days we've had multiple hedges like today, but this earnings fortnight has been really good. Others haven't. So it swings and roundabouts. You just have to wait for the profit to come in. But yeah, this is market reaction, obviously, and safe haven run. So just be careful, because it could continue. We need to hear more news. So at the moment, this is a rumor. It's probably a fact, but we need more confirmation. What does this nuclear doctrine mean? What is he saying? Is he saying if you fire one into us, we will nuke you? Or is he saying something else? Yeah, we need to know what that means. So that at the moment isn't clarified, is it? The possibility of a nuclear response. Yeah, there's always a possibility of everything, but that doesn't mean it's going to happen. Russia, we intercepted 5 ballistic missiles overnight. Oh, okay, so they're saying now that Ukraine have already fired the missiles. Careful. Do not long against the yen. Do not long against the Swiss. Shorts only. Yeah. Ukraine made their first missile strikes inside Russia. Okay, so there we go. So it's coming out. This is all coming out now. So Russia basically is now saying, screw you guys, we're just going to nuke you. Brilliant. I'm glad I live on an island. All right, here we go. Anybody got a boat I can borrow? Anybody got anything else they want to discuss based on that, on what we've covered today, or any other business? Going to be an interesting couple of weeks, I think. No, everybody all right with everything I've covered there? So I'll pop the EA into the group. It's obviously for strategy tester only at the moment. So yeah, basically go and test it. And if you want to go and test that guy Rene Balk's actual settings he's using, because I don't know what they are, but you can probably get them pretty much right with this EA. Then obviously if you come back with any decent results, then we can look at maybe moving into robustness testing on them. There is a way that you can do robustness testing with time, because these, as I said, you can't robustness test strings, and these are strings, which means they're text. So you can't robustness test text. There's no setting here. Look, you can't. They're grayed out. You can't do that. I can make the EA so that it can robustness test time, but what we need to do is turn time into a number. To do that, we need to make it a number of minutes, hours, or something else. So range start time from midnight plus 1 hour, 2 hours. Then we can use these numbers as a variable. So at the moment you can't robustness test time, but you can robustness test range, whether or any Boolean input, basically anything that's a 1 or a 0. So you can, or a true or false. So you can test opposite range. You can test all the different range sizes. You can test risk reward. This stuff you just wouldn't touch because it's not part of that. You can test, you can't test exit time. You can test whether it's best to get out if in profit every day or not. You could test time-based exits on number of hours or number of minutes after you've been in. So there's other system parameter permutation tests you can run, but time isn't one of them, unfortunately. So does the US dollar go up along with the Swiss or the yen? No, the US dollar yen and US dollar Swiss crosses will go in the opposite direction to the yen and the Swiss. The US dollar is not a safe haven. Yeah. The US dollar is the world's leading currency. It's not a safe haven. The reason the reason we call these safe haven currencies, the Swiss and the yen, is because they have low interest rates and stable economies. So the Swiss are an incredibly rich banking country, and they have very, very low unemployment, very high wealth, and therefore very low interest rates, which fluctuate very, very, very tiny amounts. So if you have to put your currency somewhere that is going to remain stable, you pick the Swiss or the yen, because the interest rates are tiny, so you're not going to make a lot, but then you're not going to lose a lot on movement. And also because the Swiss and the yen, or Japan and Switzerland, are not part of NATO alliance, any conflict-based volatility doesn't affect them. So this is one of the main reasons, although Swiss are banging Europe in this zone which could all flare up massively, they're not part of NATO. So if all of a sudden NATO get involved in the war, Swiss just sit there and go, you can come through, but we're not getting involved. Therefore, their currency fluctuation isn't going to be affected too much. So that's why it's a safe haven. And it's a banking country. This is why we have, rich people have Swiss bank accounts, because it's all anonymous. It's a closed environment, so it's a safe place. So if you are a rich guy with billions of stock holdings and war's about to kick off and your country is about to get hit, you sell all your stocks, you put it all in, liquidate it into the Swiss franc, and you can always put it back later. So this is why in safe haven runs, stock indices collapse because what's mainly happening is money has been pulled out of the stock market and put into Swiss and yen. So the Swiss and yen pairs drop. So Aussie will come down against the Swiss because the Swiss is being bought, and Aussie will come down against the yen because the yen is being bought, and the stock markets come down. Yeah, so it's just a transfer of money from A to B. And then when we go, oh, what Putin meant was if the US was to come and get involved, then we would nuke everybody, and then it goes back the other way. Yeah, so everyone goes, oh, right, get all the money back out to Swiss and stick it back into the stocks we had. Yeah, so it's a transfer that's going on. That's what safe haven run is. So anything that goes on in the world that's a problem, banking crisis, tsunamis, earthquakes, wars, trade embargoes, yeah, Trump, stuff like that, where there's something that is potentially going to long-term impact what happens, right? So if the main oil pipelines from the UAE all got cut at the same time by a big nuclear strike or something, oil ain't going anywhere. Oil price is going to fly through the roof. Yeah, everybody will sell everything and stick it in oil. Yeah, it's transfer of money. That's what safe haven runs are. Now, this isn't a big one at the moment. Yeah, it's stalled. But what this is a knee-jerk reaction. It's a quick, get ready to. Yeah, and it may not happen. So often you'll find that. But if it is Russia threatening the entire world with its what they call the Satan missiles, yeah, we're all dead. So you might as well sell all your stocks because you're not going to be able to spend the money. You know, have you seen those Satan missiles? Unbelievable. The RS-28. This thing, I think it's got 8 warheads or something, 8 or 12 warheads. And he's got a lot of them, but basically what it does is it launches up into the atmosphere, yeah, where we can't touch it, up in space pretty much, yeah. And then it basically starts to come down, and as it's coming down, it releases, I think it's 8 nuclear warheads, each with 666, this is why it's called Satan, 666 times the nuclear power of Hiroshima, yeah, onto every major city in a country at hypersonic speed, which cannot be intercepted by any air defense any country currently has. So they launch this thing into space where we can't touch it. As it's coming down, it comes down so fast we can't even see it, and it hits every country with 666 times the power of Hiroshima. Yeah. US, basically, New York, Washington, Seattle, LA, everywhere, all the big cities, all the big major hubs would be wiped out like that. Gone. War over. We were lost. For me in the UK, they hit Portsmouth, Brighton and London. Yeah, and I think the initial fallout where everybody dies is 33 miles. And then it's further than that, you're all dying. But within 33 miles of that hitting, everything's gone. Everybody's gone. That's it. Yeah, so when this sort of stuff comes on the news, I hate to be the bearer of bad news, but that's the reality of what we're dealing with. Yeah, this is why the markets panic, because, you know, he's a man on the edge, isn't he, at the end of the day. He's pretending stuff doesn't happen all the time, and he's got that power under his finger. Now, there's people, obviously, in Russia, I'm assuming, that will hopefully stop him. But you just don't know what's going on, do you? So there we go. Look, yen, Swiss franc, and the treasury. So treasuries will go up as well. Again, treasuries are a safe haven. We can't trade those as CFDs, but that's the safe haven run. So yeah, but yeah, it's a scary thing. And you know, nobody's got any defense against these things at all. We haven't got anything that can shoot them down. So you'll know they're coming, but that's about all you'll know. Operational range, 11,000 miles. It can basically, there goes, 30,000 feet. So suborbital flight and it can go 11,000 miles. You can't, it can reach anywhere on the planet. Yeah. And all he's got to do is send 10 of them up. And we're basically, it's all game over, isn't it? It's Russia, North Korea, and China left. That's it. We're all gone. So, yeah. Good luck with your trading careers. Anyway, don't want to be doom and gloom. But that's why safe haven runs happen, because people panic. Yeah. But, I mean, realistically, if he was to do something like that, who's he going to trade with? You know, they need us as well. But obviously... not as much as they need their ego. Anyway, we'll leave it there on that cheery note. Come back tomorrow for more cheery notes. Hopefully, I'll still be here. But tomorrow we're trading US. Tomorrow afternoon, when my live room, you see, my server will go down before me. Wednesday, 2:30 tomorrow afternoon, we'll do the NAS and the Dow. And we'll get an update on what's going on, obviously, at the moment. This afternoon, be aware of CPI for the Canadian. Whether or not they'll do anything with that now, we'll have to wait and see. But this is obviously going to be a news thing that's going to progress throughout the day. So just be wary. We're in weird times at the minute. As you can see, these are still continuing. We're just hitting ADR on the DAX. We're about to hit ADR on the FTSE as well. So... this is a falling knife. Be careful. You know, this is not unachievable 175 ADR by any means today. So just be careful with indices today. I may even not bother trading this afternoon because I don't know what the market reaction is going to be. Obviously, you can see the Dow, all US indices are doing the same. It's a massive sell-off. So just not worth playing with today, I don't think. All right, I'll get the EA out this morning, have a play, and then Thursday, at the moment, I haven't got anything planned for Thursday's session, so it'll be an update on what we've covered. Anything that you guys come to me with this EA to test, robustness test, and that sort of stuff, I may look at trying to do a time variable on it as well. But I've also got the DAX, or rather, I call it the DAX strategy, but the index strategy that I'm working on, which is going to be a rule-based EA to try and replicate best practice within index trading, which I discussed yesterday a little bit. So I am working on that EA, but whether it'll be ready for Thursday or not, I don't know. So anything else you want to cover on Thursday, let me know. But I've got other stuff planned if I haven't got that ready. But hopefully we'll have some more testing we can do with this breakout strategy. And again, don't forget, you can also trade very small time frames with this as well. So have a play and see how you get on with it. All right, but I'll get that out for you this morning. Anything else you need, let me know. I'll be in Discord. Sega, if you've got any problems connecting, I can't really help you because there is only one way to do it, but it's there. So hopefully you can get that sorted. All right, anything you need, let me know. Otherwise, I'll see you guys next time. Have a good day.